everyone, myself Shikha Gupta, and today we are going to study about a very important topic of financial management, which is dividend decision. Before studying about dividend decision, we need to know what is dividend. The term dividend refers to that part of profit of a company which is distributed by the company among its shareholders. It is the reward of the shareholders for investment made by them in the shares of the company. Now, if we need to understand it easily, we can say a dividend is a distribution of profit by the company to its shareholder. Whenever a company earns a profit or surplus, that company is able to pay a proportion of the profit as a dividend to the shareholders. Now, this amount which is distributed to the shareholders is known as dividend, and the amount which is not distributed to the shareholders is termed as retained profit, and it is reinvested in any of the business activities. Talking about what is dividend policy, the term dividend policy refers to the policy concerning quantum of profit to be distributed as dividend. The concept of dividend policy implies that companies through their board of directors evolve a pattern of dividend payment which has a bearing on future action. Now, talking about dividend policy or dividend decision, now dividend decision is concerned with the decision relating to whether the profit needs to be distributed to the shareholders as dividend or not, or if distributed to the shareholders, then what is the proportion of profit that needs to be distributed. So whenever we decide or whenever we take any decision on payment of dividend, proper dividend policy must be followed by the organization, and the organization which follows proper dividend policy succeeds in future. This dividend policy should be very clear enough whether all the profit needs to be distributed to the dividend to the shareholders, or any of the amount needs to be retained, or all of the profit which have been earned needs to be retained by the organization. Now, next part is your forms or kinds of dividend. The first form of dividend is your cash dividend. Now, cash dividend is one of the most important form of dividend which is paid by the organization. Now, the company may decide to pay dividend in the form of cash based on a schedule. Now, cash dividend may be regular as well as special dividend. Regular cash dividends are paid regularly to the shareholders, while your special cash dividend are paid in special circumstances and not regularly. Talking about the second type of dividend, it is scrip dividend. Now, under this form, a company issues a transferable promissory note to the shareholders. Now, what is this transferable promissory note? This transferable promissory note will confirm the payment of dividend to the shareholder on a future date. That means that note will be held by the shareholder, and on the date whenever the payment must be made, that promissory note will come into effect, and the company have to pay the amount of dividend to the shareholders on the basis of that promissory note. Now, this scrip dividend has a shorter maturity period, and also it may or may not bear any interest. This dividend are issued whenever a company does not have enough liquidity and requires some time to convert its current assets into cash. Talking about bond dividend and scrip dividend are one and the same, but talking about their difference, bond dividend have a longer maturity period, and the interest is chargeable on this bond dividend. That means in scrip dividend, the interest there may or may not the company may or may not bear any interest, but in case of bond dividend, it is important that the interest must be borne by the organization. Talking about the fourth one, stock dividend. Now, stock dividend is also termed as bonus shares issued to the shareholders. Now, these types of dividend are issued when a company lacks operating cash. When the company does not have cash, the company will issue a common stock to the shareholders to keep them satisfied and motivated. We need to be very clear enough that if we are running a company, we have to keep our shareholders very much satisfied, because they are the one who will be sharing or who will be investing their capital in our business. Now, the shareholders get additional shares in proportion to the shares which they already have, and they do not have to pay any extra amount for this bonus shares, which is issued by the organization to the shareholders. So stock dividend are the bonus shares which are issued by the company to the shareholders. Talking about the fifth one is your property dividend. Now, this dividend are paid in the form of a property rather than in cash. Now, in whenever the company lacks operating cash, then non-monetary dividends are paid to the investors. Now, the property dividends can be in any form. It may be inventory, asset, vehicle, or any other thing. The last one is your liquidating dividend. In liquidating dividend, whenever the board of directors decides to pay back the original capital which is contributed by the shareholders, then they declare liquidating dividend. Now, in short, in easier way, we can understand that whenever the company thinks of winding up its organization, then they will be giving liquidating dividend to the shareholders, where they decide to pay back the original capital whatever have been given by the shareholders. Now, talking about the determinants or factors which affects the dividend policy. The first one is type of industry. Now, industries that are characterized by stability of earnings may have or formulate a more consistent policy as to dividend than those which are having an uneven flow of income. Like for example, if we are taking public utility companies or public utility concern, they are in a much better position to adopt a relatively fixed dividend rate than the industrial concern. So it is said that the type of industries which they are undergoing have a bearing on or have effect on the dividend policy. The second one is age of corporation. Now, a newly established enterprise will require more of their profit or more of their earnings for plant improvement, expansion, and growth. While when we talk about the old companies, they will have retained a longer earning experience, and they can formulate clear cut dividend policy and may even be liberal in the distribution of dividend rather than the newly established enterprise, because newly established enterprise will require more of the profit for their growth, but old companies can give dividend, can have a liberal dividend policy, since they can give on their dividend and they have a longer earning experience. Third one is extent of share distribution. Now, closely held companies likely to get consent of the shareholders for the suspension of dividend or for following a conservative dividend policy. When we talk about conservative dividend policy means some of the part of the profit is retained and the rest of the part will be paid as a dividend. But when we talk about a company with a large number of shareholders which who are widely scattered, they would face a great difficulty in securing such assent from all the shareholders. So we always say that extent of share distribution is dependent on whether the shareholders give their consent or not. Now, reduction in dividend can be effected but not without the consent or cooperation of the shareholders. Next is need for additional capital. Now, the extent to which the profits are plowed back or retained into the business has got a considerable influence or effect on the dividend policy. The income may be conserved for meeting the increased requirement of working capital or also future expansion. Fifth is business cycle. Now, during the boom period, we know during the boom period, prudent corporate management creates good reserves for facing the crisis or uncertain events which follows the inflationary period. And higher rates of dividend are used as a tool for marketing the securities in an otherwise depressed market. So these business cycles also affect the dividend policy, because the company will follow that dividend policy which will be beneficial for them. Next is change in government policies. Now, government also keeps on changing its policies, and based on that change in the policies, the companies also have to change their dividend policies. Now, the sometimes government limits the rate of dividend declared by companies in a particular industry or in all spheres of the business activity. This will have an effect on the dividend policy. Next is trends of profit. Now, the past trend of the company's profit should be thoroughly examined to find out the average earning position of that company. Now, this average earning should be subjected to the trends of general economic condition. If depression is approaching, only a conservative dividend policy can be regarded as a beneficial one or a prudent one. Next is taxation policy. Now, corporate taxes affect dividend directly or indirectly. Now, how directly? Directly in as much as they reduce the residual profit after tax available for shareholders, and indirectly as the distribution of dividend beyond a certain limit is itself subject to tax. Now, at present, when we talk about tax, the amount of dividend which is declared by the company is tax-free in the hands of the shareholders. That means the shareholder did not pay any tax on the dividend which they receive from the company. Next is future requirement. Now, accumulation of profit becomes necessary to provide against contingencies or hazards of the business, to finance future expansion of the business, and to modernize or replace equipment of the enterprise. Now, the conflicting claims of dividend and accumulation should be equitably settled by the management. So it is always said, whenever future requirements is necessary for the organization, the company has to plan or has to take the proper dividend policy. Next, last one is our cash balance. Now, if the working capital of the company is small, liberal policy of cash dividend cannot be adopted. Dividend has to take the form of bonus shares issued to the members in lieu of cash payment. Whenever we say the cash balance in the organization is less, then we cannot declare cash dividend, and we can declare dividend in the other form but not in cash. Now, the regularity of dividend payment and the stability of its rate are the two main objectives aimed at by the corporate management. So it is always said that the cash balance has also been a very important part in deciding the dividend policy of the organization. Now let us talk about the types of dividend policy. Now there are basically four types of dividend policy. The first one is regular dividend policy, second is stable dividend policy, third is irregular dividend policy, and last one is no dividend policy. Let us understand it one by one. The first one is regular dividend policy. Now under this type of dividend policy, the company follows the procedure to pay out the dividend to the shareholders every year. If the company earns abnormal profit, then it retains the extra profit, and if the company earns abnormal profit, then it retains the extra profit. Whereas if it remains in loss any year, then also it pays dividend to its shareholders. So in regular dividend policy, the dividend is paid regularly to the shareholders. Talking about the second one, which is stable dividend policy, under this type of dividend policy, the companies follows the procedure to pay out the dividend in percentage form. That is, we say fixed percentage of profit is paid to the shareholders every year. In regular dividend policy, no fixed percentage is fixed, but in stable dividend policy, a fixed percentage of profit is fixed. That is, fixed percentage of profit of dividend will be paid to the shareholders every year. Talking about irregular dividend policy, that is under this type of policy, company states that it has no obligation in respect of paying a dividend to the shareholders. The board of directors will decide the quantum and the rate of dividend which needs to be paid to the shareholders. They will decide in respect of action taken with the earned profit. Whether they need to pay the dividend to the shareholders or not, that depends on the board of directors. Here, no promises are made to the shareholder as to payment of dividend, the amount, or there is no fixed percentage which needs to be paid to the shareholders. Talking about no dividend policy, under this type of dividend policy, the company follows the procedure of paying no dividend to the shareholders irrespective of its profit or loss scenario. Now the payout ratio will be 0%. Of course, if no dividend is paid, then the payout ratio will be 0%, and the total earnings which is earned by the organization will be retained by itself, and it will be reinvested in the other organizations, or we can say it can be reinvested in other business activities. Now, in regular dividend is paid regularly to the shareholders in spite of whether they are earning profit or loss. In stable dividend, a fixed percentage of profit is being fixed, and that is paid to the shareholders every year. In irregular dividend policy, no promises are made to the shareholders regarding what is the amount of dividend which needs to be paid or what is the rate of dividend. So the decision on payment of dividend is with the shareholder, is with the board of directors, and board of directors will take decision whether to pay dividend to the shareholders or not. And last one, no dividend policy. Under this no dividend policy, the payout ratio is 0% because no dividend is paid out of the profits, and the total profit is being retained by the business or by the company for reinvesting in other business activities. That's all. Thank you.